So on Monday, which was yesterday, Zimbabwe reported a 31% uptick in July inflation to 837%. Meantime, the Zimbabwe dollar was fairly stable for the first time in formal trade at the new interbank market this week, trading a negative 0.4% from an average weekly loss of 5% over the past 8 weeks. Professor Ashok Chakravarti is an economic advisor with the Zimbabwe's Ministry of Finance, and he joins us now from Harare. A good evening to you, sir. Good to have you on the show.
Thank you. Good evening to you.
Thank you. Well, what are the key macroeconomic policy plans Zimbabwe is pursuing to tackle the challenges the economy currently faces?
Well, first and foremost, we have stabilized our budget. As you know, with the previous government, we were running budget deficits of up to 15% of GDP, which were not sustainable. That has been put under control by the current minister. In 2019, we had a balanced budget. And indeed, 2020, in spite of the extra expenses required due to COVID, we are probably going to continue to have a balanced budget or just a very minor deficit. So we have brought the fiscus under control. Similarly, on the monetary side, everything was out of control during the previous government. This has completely changed. We have stability on our monetary scene, and we have a monetary policy committee which keeps a close eye on monetary aggregates. Borrowing by the government from the Reserve Bank has completely stopped. And so basically, fiscal and monetary policy, we are following prudent policies now, and we expect this to generate stability going forward.
What about inflation, Professor? How are you tackling that so that you can preserve some value on investment assets?
Yeah. So inflation, we have done a lot of analysis. It is essentially our being a small open economy, which is import dependent. Our inflation has been primarily as a result of the depreciation of the exchange rate and the parallel market, the black market that has existed. So that in the last 6 months, we have been gradually taking measures, as has been taken indeed in Nigeria and in other countries, to liberalize the foreign exchange market and stabilize the exchange rate. And about 2 months ago, we abandoned the old policies of having fixed exchange rates because we all know that such things don't work anymore. We have now introduced a liberalized auction system, which allows importers to bid for the foreign exchange. And over the last 2 months, these auctions have resulted in our exchange rate more or less stabilizing at about 80 to 1 United States dollar. So going forward, we hope that will have an impact on stabilizing prices.
So Professor, how do you hope to secure critical investments into Zimbabwe, both a bit of a local domestic capital formation locally and get other assistance from outside?
Well, look, in terms of domestic investment, a lot of policies are being put in place. We've got an industrialization policy which is value chain based, and all possible incentives will be given to domestic investors. In terms of foreign investment, it's a more complex issue because we have had a breakdown in our relationships with the international financial community because Zimbabwe has been in arrears. The previous government ran up arrears with the IMF, the World Bank, and the African Development Bank. And the reestablishment of those relationships will take some time. So I cannot say that we are looking forward to getting significant foreign direct investment flows in the near future, but domestic investment certainly. Zimbabwe has got quite a big middle class and quite a big entrepreneurial class, indigenous entrepreneurial class. So we are hoping to mobilize that as a first step.
Also, you got some support from the Africa Risk Capacity Insurance Limited earlier in the year to support the drought on agriculture and all that. How is that working out in terms of that funding? And are you ramping up on agricultural outputs locally, at least to export some to other countries within the SADC region?
No, in agriculture, we've also had difficulties because last year we had an extremely severe drought. And as a consequence of that, our GDP declined by 6%. We had minus 6% last year. The drought not only affected agriculture, but it affected power generation. So we had severe power cuts, and that affected industry. Luckily, this year we are in a better situation. In spite of the COVID epidemic, we've had near normal rainfalls. So currently, our power generation is almost back to normal. In the last couple of months, we've not had any load shedding at all. So that's a plus. And the prediction is that we are going to have a normal rainy season, a rainfall season. So that's all very positive. And then also, there's an increasing focus now. We are currently in the preparation of our new National Development Plan. And one of the main programs within that is to drought-proof our agriculture. So there's going to be a significant focus on irrigation going forward.
So this new National Development Plan, what is the timeline for it? Is it a short-term plan? Is it a long-term plan? How many years? And what are the growth projections within that document?
So we've just had a 2-year stabilization program, which has been putting into place all the measures I've talked about on the monetary and the fiscal front, and particularly on the exchange rate. That's the most important development that has happened in the last few months. The Transitional Development Plan, we are working with the United Nations and the World Bank and other agencies. That will be from 2021 to 2025. It's a 5-year plan.
We thank you for your time this evening, Professor Ashok Chakravarti. Do have a great evening in Harare. Thank you very much and wish you all the best.